This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here as we kick off the month of March. And top story today, not surprising, we're going to be talking about the conflict in the Middle East and what it potentially means for markets. And so obviously I don't know how much detail we need to go into about, what exactly is happening, but obviously...
If you're tuning into the Financial Exchange for your breaking news on the U.S. Striking Iran...
You're doing it wrong.
You're doing it wrong.
Yeah. So here's what we do know overnight, just in terms of new developments that I think are important as it goes, financially. And quick, upfront thing, we're not here to assess whether or not, the attack is going well or not. We're here to assess the potential economic impacts of it. So, we're not going to be, as Mike said, we're not breaking news trying to figure out, what does this mean? What does that mean as far as, is this successful or not? But much more, hey, here's some of the scenarios that we're seeing. And as they develop, we can outline potential ramifications from them. So overnight, a few big developments that I think are important in determining how this may play out economically. Because really, when you think about it, there are three key factors that are going to determine how large the economic impact from this actually is. The first is the duration of it. If this thing is over later today, it's probably not going to have any kind of long-standing economic impact on the U.S. economy.
Sure.
If this is still ongoing a month from now? It very well could. It's still not a guarantee because there are two other factors that matter, but duration is one of the big ones that we're paying attention to. The next one, the scope of it. Is this confined to a limited area, or does it expand into more of a regional conflict or beyond that? That's obviously something that matters as well.
Yeah, and obviously I think you can already make an argument it has expanded. There were strikes by Iran on many neighbors, but it has not expanded to anyone joining the Iranians. It has not expanded in that fashion. But, I mean, I think important to acknowledge that it has already expanded beyond a conflict of U.S.-Israel strike Iran.
So the scope is going to matter. How far does it spread? And the third piece there, the third key factor, is the magnitude of it. You know, beyond just, hey, how far does it spread? What's the magnitude? What's the real impact of that spread? If it's, sporadic, small things that happen, you can make a case that that's not, too big of a deal from an economic standpoint. If this is something where it becomes a larger, more impactful conflict throughout a larger region, that obviously matters more. So those are the three things that matter. The duration, the scope, and the magnitude. Those are the big ones. So with that in mind, here's what we've seen overnight in terms of how things are developing along those fronts. The first is conflict is obviously still going on. As of this morning, you still have munitions going back and forth. You still have U.S. and Israeli airplanes that are in the air. And so still going on. So not over in, a day. Other things that we're seeing. Iran is continuing to strike beyond military targets in the region. They are continuing to strike civilian and energy infrastructure in the region. And earlier in this, on Saturday and even early into Sunday, I think that you could have acknowledged the possibility that because of all of the electronic warfare that's conducted during this time, and what I mean by that is, look, the U.S. and Israelis and anyone who's participating in any military conflict anywhere, they try to control the electromagnetic spectrum in order to jam up, radio signals and radar signals and this and that, and, make GPS things, spoof to look like you're in a place that you're not in. So but you could make a case that in the first day or so, hey, you saw, an Iranian drone hitting a building in Bahrain or in Dubai, and you might say, well, maybe it was just, jammed and it wasn't intending to go there.
Yeah.
At this point, given the breadth of where Iranian drones and or ballistic missiles have hit, I think it's pretty clear that Iran is indeed targeting civilian and energy infrastructure throughout the region, most likely deliberately.
Sure.
And what this means is, think about this from the perspective, people say, well, that's dumb. Why would you do that? And the answer is, well, when you've been told that you are going to be exterminated as a regime, you say, okay, fine, we're going to make things as painful as possible for everyone in the region in order to try to put an end to it before it gets to that point. So think about it from the perspective then of if you are Bahrain or if you're Dubai or Oman or any of these cities or states or countries, any of these locations, the very premise by which you've built up your vast wealth in the last couple of years and your influence in the last couple decades rather is twofold. Number one, hey, you obviously supply a bunch of energy to the world, but beyond that, you've attracted capital because you've convinced capital, hey, it's safe to be here, and this is, a great place to be.
Yeah, I mean, as far as convincing tech companies to invest there, expats to live there, it's been an argument of this is a safe region. I mean, what portion of the world's flights travel through there? A whole bunch of fundamental things that are necessary to the economy beyond just the flow of oil.
And so if you're Iran, the logical response is, okay, fine. We're going to target all of your, energy infrastructure that's had you get to this point. And, hey, yeah, we'll lob something at a, civilian airport or at a city and this and that because that's going to get you behind the scenes going to the U.S. saying, guys, we got to stop this. We can't have this going on.
Sure.
I'm not saying this is, right or good, but I'm saying it's actually a perfectly logical response if you are threatened with your extermination is, no, try to make things really uncomfortable for the opposing faction before that happens.
And obviously a lot has been written and discussed about already as to whether or not that's been a successful strategy or more of a compelling strategy to further decapitate the regime from those neighbors. A little bit of debate there.
So this is where we are, is that Iran is clearly striking civilian and energy infrastructure in the region. This morning, Qatar Energy, who produces about 20% of the world's liquefied natural gas, they have halted production of LNG following attacks on their facilities. 20% of the world's LNG disrupted is a big deal. Now, this is not 20% of the overall natural gas supply in the world. If you look at what Qatar produces, it's about 5% of the world's supply overall. But, hey, if you're having a couple percentage points of total supply disrupted, that's a big deal, as we saw back in 2022 with what was going on with Russia and Ukraine. Other things that we're seeing, multiple reports this morning that the U.S.-flagged tanker Stena Imperative was hit by 2 projectiles while in port. We don't have details on what those were yet. We don't know if they were drones, ballistic missiles, or anything else. But this is the first instance of a U.S.-flagged vehicle, a U.S.-flagged ship that may have been hit by Iranian projectiles.
Safe to say, I would think that any ship transiting anywhere near Iran is going to have a tough time finding insurance.
And this is the big thing, is basically immediately at the outset of this, all of the major maritime insurance carriers canceled the policies that were in place for ships that were in the region and said, we're going to have to put a hold on this before we even are willing to assess, what a new policy would cost, because we don't really know what the situation is. So right now, there is no traffic moving through the Strait of Hormuz.
Right.
It's not that Iran has, effectively, blockaded it. It's more the insurance companies aren't willing to cover them. And given that Iran has hit at least one ship in the region, likely several others based on initial reports, you have no ships that are willing to transit the Strait of Hormuz, which on a daily basis typically carries around 20% of the world's oil. So once again, if you look at this in the context of, hey, if this stops in the next couple of days, it's probably not a huge deal for, worldwide markets, once you get through this period. If we're talking about this with, ships not able to transit Hormuz over the next, several weeks, it starts to become problematic in terms of where does most of the world get its oil from then. It's a little bit different here in the United States because in the United States, we are the biggest producer of oil in the world. And while it's not an ideal situation, you certainly have flexibility that many countries don't when it comes to being able to reduce exports of oil and use that oil domestically, potentially. You'd have to do some work on the refining side of things because the way the U.S. refineries are set up, it's not necessarily to refine the type of oil that we produce in the United States, so you have to do some work on that front. But this is just kind of the lay of the land and setting the stage on all of this. So I think in terms of the assessment that I have at this point, it's still very early. We don't know exactly how things are going to develop, but the potential exists for significant disruptions to energy markets that could last, an extended period of time. But there's also the possibility that this is not an extended conflict, and as such, you might see things, develop more positively in the coming days, and we're just going to have to see how things play out.
So let's take a break. When we come back, maybe just talk about 3 areas of the market that I think a lot has been written about so far this morning: stocks, bonds, energy markets.
Yes.
When we return.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
Divorce isn't just a legal process. It's a financial reset. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide, Divorce and Your Financial Plan, walks you through how to take inventory of your assets, avoid common mistakes when splitting accounts, update beneficiaries, and start building a plan that works for your next chapter. Divorce is complicated enough without all of its financial ramifications. The decisions you make now can have lasting consequences for your future, because after a divorce, it's not just about who gets what. It's about making sure your financial financial life is truly separated and set up to support your goals going forward. Call the Armstrong Advisory Group right now at 800-393-4001 and get your free guide, Divorce and Your Financial Plan. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Many families consider using a life estate as part of their planning, but without a clear understanding, it can lead to unintended consequences. Cushing & Dolan have a new guide called Calculating the Consequences of Life Estates that explains what to watch for and how to think through your options before making any decisions. Key rules to be aware of include the 5-year Medicaid lookback, where the state reviews financial transactions over the prior 5 years, and certain transfers, like giving away property or assets, can create a period where benefits are delayed. Call Cushing & Dolan at 866-848-5699 to request your free guide today. That's 866-848-5699. Or request the guide online by visiting our website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. Act now and take advantage of a special promotion to St. Croix. Call the vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using code VIBE2026. For more information and to book your trip, go to visitusvi.com and use code VIBE2026. That's visitusvi.com and code VIBE2026.
Mike, let's talk a little bit about the impact of the attack on Iran in the context of major markets. So equities, bonds,
Sure.
and energy.
Yeah. So first thing, I think timing is interesting here, right? We all went to bed on the East Coast and woke up to this on Saturday morning, or at least that was my experience. It has given investors a good 48 hours. 48 hours Sunday? Yeah, good 48 hours to think about and react to everything while markets were closed. And that is, I think, important to mention because while we saw some volatility in overnight markets and futures opened, I think, last night down about 1+%, relatively calm this morning. And I think in large part due to the fact that this has been ongoing now for 48 hours.
By the way, I need to point out, again, maybe it's a coincidence, maybe it's not. This is standard operating procedure from Trump administration now. Maduro, captured on Saturday. Last year, strikes on Iranian nuclear facilities. It was either a Friday night or a Saturday morning. I can't remember, offhand. There's a big part of me that thinks that this is somewhat by design, that it happens on weekends to give financial markets time to absorb. I know that there are obviously, other pressing, desires as far as, hey, we need to execute this, with the best, possibility of success for the mission. But again, it feels to me like more than a coincidence that all of these have happened on weekends.
I agree.
And by the way, there's also been, a number of different, announcements that have happened on weekends for the same reason, I think. So here's the thing about these three markets. The first is, if 2022 convinced me of anything, it's don't pay attention to what equity markets do immediately after a conflict breaks out. The day that Russia invaded Ukraine, the S&P 500 had closed the day before at, let's see, let me pull it up here. It was at around 4,200. It then fell during the morning down to around 4,114, so a 2% fall, before reversing higher before the close and finishing at 43.10. So it was a 4% intraday reversal to the top side. Ultimately, the S&P 500 crossed that mark on two other occasions that year, but still ended up closing about 10% below that by the end of the year.
Arguably for reasons not directly related to the Russian invasion of Ukraine, but
the Russian invasion of Ukraine exacerbated the inflation problem, though. And so I think number one is, hey, I don't think that you can get a reliable read on what equity markets are going to do based on what they do, the day that hostilities start. I think that's just kind of where I tend to land there. On the other hand, I look at the bond market and I see, listen, in any conflict, you have two different possibilities that can take hold in bond markets. The first is, hey, is there anything that's an inflationary impulse here that could potentially push up costs?
Oil prices.
The answer is obviously yes here. The second is, hey, is there any kind of short-term weakness that this potentially creates in the economy through a lack of demand as people get nervous about spending money on whatever? It could be travel. Obviously, that could have, some concerns. It could be, hey, do I feel comfortable buying a house, given some of this uncertainty? And today, at least, bonds are saying, yeah, we're more nervous about the inflationary aspect because the 10-year Treasury is up 7.5 basis points to 4.03%.
Right. So anybody calling for that safe haven move, stocks down, bonds up, that's not what we're getting today. And I'm not sure it logically should be what we get today.
What we are getting, and third market that I want to talk about, actually, sorry, there's four that we have to cover. The third is currencies, because we are getting the safe haven bid in the dollar.
Okay.
Dollar index is up almost 1% today to 98.5, and it makes perfect sense. Look, there are two reasons why the dollar index typically gets bid up. Number one is people are really nervous. Number two is people are really excited. And it creates what's called the dollar smile. Think about the shape of a smile. It's high on the sides when people are either nervous or excited. So kind of if you're graphing this, the far left side might be, hey, people are really nervous. The dollar gets bid up in that case. Far right side is, hey, dollar gets bid up when people are really excited because there's a ton of money flowing into the U.S. because of that excitement. The place where you typically see dollar weakness is in the middle when people aren't either excited or scared. And so obviously on a day when people are scared, you'd expect to see the dollar bid, and you are seeing that. So I'm trying to think of the best way to phrase this just to make my point. Here's how I'm going to phrase it. To all you dollar haters out there, if the dollar were really no longer a safe haven, it wouldn't be getting bid today.
Right.
Like, that's just the deal. You know, all the people, oh, it's the end of the U.S. dollar. Like, dollar hegemony is over. Like, yeah. No, that's not the case. The dollar's getting bid up about 1% today, which is exactly what you would expect to see here. Finally, energy markets. This is the $10 trillion question. And again, it's going to be answered by two factors. The duration of this, the scope of it. The magnitude doesn't really matter because the scope is going to determine the magnitude in energy markets. Iran doesn't have to do very much to disrupt energy markets other than make it uninsurable for them to operate. And that doesn't mean they have to sink anything that goes through Hormuz. It just means that the threat has to be real. And right now, insurers are saying, yep, feels pretty real. So energy markets are moving up today. Do they stay there? That's going to depend on the duration of this, which we just don't know yet. Quick break. We've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
This is Mike Armstrong and Paul Lane from the Armstrong Advisory Group out with our brand new guide for the month of March about divorce and your financial plan. And certainly while it's not the path that anybody hopes to go down with their marriage, many marriages do result in this, and it results in a full reformatting of their financial scenario. Now, Paul, understanding these different assets that ultimately need to get divided in the event of a divorce, gets pretty complicated. So let's start with the basics when you're thinking about retirement assets versus the home versus, say, a checking account. How does one need to be thinking about these different buckets of money when they're talking about the equitable division of assets in a divorce?
Yeah, Mike, first you have to divide out those different assets into those buckets you were alluding to before: pre-tax retirement savings, real estate, as well as after-tax investment accounts. And what you have to understand is with the pre-tax retirement savings accounts, there are taxes and potentially penalties associated with those. So those assets are not equal to perhaps some money in a bank account, for example, that is much easier to access and withdraw. Same thing with real estate. Equity might be significant in a property, but there are a lot of carrying costs and expenses associated with that ownership.
Yeah, these things are complicated, and unfortunately, what it can lead to if you're not prepared for it is a division of assets that doesn't work out in your favor once you consider the after-tax implications of that division. If you have questions that you're facing as you head towards this life move, get your copy of our new guide, Divorce and Your Financial Plan. It's available by calling us at 800-393-4001. Again, it's the free guide, Divorce and Your Financial Plan, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are seeing a modest sell-off at the moment as Wall Street assesses the conflict in the Middle East after the U.S. and Israel attacked Iran over the weekend, sending oil prices higher. Right now, the Dow is down over 0.4% or 215 points lower. S&P 500 down just over 0.5% or 36 points lower. NASDAQ down about 0.4% or 97 points lower. Russell 2000 mostly flat, edging higher. 10-year Treasury yield jumping 7 basis points at 4.04%, and crude oil jumping about 7% higher, trading at $71.59. Several major oil producers, including ExxonMobil, Chevron, and ConocoPhillips, are seeing slight gains in reaction to the increase in oil prices. Defense stocks, including Lockheed Martin and Northrop Grumman, are also seeing gains of about 3%. Travel sector also taking a hit due to higher oil prices and disrupted global travel. Delta, American Airlines, and United are all shedding about 2 to 3%, while Expedia and Booking Holdings are down about 1 to 3%. Cruise operators, including Norwegian and Carnival, also taking a hit of anywhere between 7 and 10%. Outside of the Middle East, NVIDIA announced this morning it is investing a combined $4 billion in Lumentum and Coherent. Two companies develop photonics technologies. Separately, the Wall Street Journal reported that NVIDIA plans to unveil a new processor specially tailored to help OpenAI and other customers build faster, more efficient tools. NVIDIA stock is up nearly 2%, and shares in Berkshire Hathaway are down over 4% after the conglomerate reported a 2.5% drop in quarterly profit and a 30% decline in operating earnings. New CEO Greg Abel also outlined his vision in his first letter to shareholders, embracing Warren Buffett's strategy. I'm Tucker Silva, and that is Wall Street Watch.
Mike, so we've covered a lot of ground with the Iran situation. Obviously, we'll continue to update any economic information that develops out of it. But I want to transition now to talk about the stuff that we were talking about last week.
Yeah, which also was sending markets into some turmoil.
There's a lot of moving pieces right now. And one of the biggest ones is the question of, hey, is artificial intelligence going to result in large amounts of job loss? And I say large amounts because here's the thing. Basically, every major technology that has ever been created has resulted in job loss.
Sure.
Have you
heard of a Luddite?
I use this example all the time. When the printing press was invented, the stone tablet makers were pissed. They did not enjoy that. They were like, oh, man, like, we're out of a job. Even more recently, look, talk about, what the railroad did and talk about, what airplanes did. The automobile, the internet, all of these killed off certain jobs and had new jobs that went along with them. But
And in some cases, too, it was not like peaceful. I jokingly mentioned the Luddites, right? If you heard that term,
actually, like,
it was
revolted.
violent.
Yes.
They revolted. They destroyed machinery as in a revolt of this new technology that was going to replace a whole bunch of jobs. So I'm not we're not paving over any of that stuff and saying that is universally good. There are lots of people who are badly affected by technological change in the short term, especially.
What matters to the broader economy is there are two things that matter. The first is the pace of it and the depth of it. And here's what I mean by this, and this will combine both. If you were to see 2 million jobs replaced by artificial intelligence over the next 10 years, doesn't matter to the broad economy. It still might suck for those people that lose their jobs.
Sure.
I'm not saying it won't, but the broad economy, okay, a couple 100,000 jobs a year being replaced by automation, not a factor.
Yep.
If we have 5 million jobs replaced by automation in the next 18 months,
or 2 million. Like either one of those is problematic.
2 million, even there, like you can say, look, remember that in a normal month, there are 2 million separations from jobs, and those people, most of them tend to find work, within the next 3 to 6 months if you look at the unemployment data out there. But like if you start, really accelerating and saying, hey, an extra 3% of the workforce is going to get laid off in the next 18 months because of this, gee, that's a big chunk that needs to then find jobs. And remember, there's only about 6.5 million jobs outstanding from what we can tell. And so if you have another 5 million coming into, unemployment at a time where there's only 6 million jobs outstanding, gee, like the math starts to get problematic in a hurry.
And by the way, this does lead into that Citrini research piece that we covered while you were out, Chuck. But for those that missed it, it was this piece written from the perspective of somebody in 2028 looking back at the last couple of years. And it talked about...
I love that got picked up by everyone, by the way.
I know. It looked at 10% unemployment, market sell-off, and all of these different things. And I'm not sure how fundamentally serious of a piece it was meant to be intended. Two, the author of the piece has since given interviews and said, look, we wrote this from the perspective of what would happen if the exponential growth in the pace of AI development were to continue for the next 2 years, because it has been pretty exponential. And it's not our base case, but what if it were to happen? And this is how we saw things playing out. And so it gets to that pace of change type thing where, if this technology were to continue to expand and not plateau in terms of development over the course of the next 2 years, that's possible. By the author's own admission, they think that's a maybe 10% likelihood scenario.
Now, this was then exacerbated later in the week. I think it was either Wednesday or Thursday when Block, the company formerly known as Square,
which is still not helpful in
had to do
that,
decided they were going to lay off about 40% of their workforce, close to 4,000 people. And the question that's out there is, because if you look at Block and how they ramped up their hiring, their number of employees basically quadrupled in like a 4 to 5 year period. And so the question is, look, when you look at Block, one of two things is happening. Either A, they overhired and are now trying to get their employee size, their headcount correct, or B, they actually just think, hey, our headcount was correct, but now we can do more with AI, and we're going to do this now. Quite honestly, it's probably some of both, and it's really hard to untangle, the exact ones. Here's one thing that I do know after, the last 5 years. Jack Dorsey, who runs Block, used to run Twitter. Probably not a great manager of headcount. And what I mean by that is, when Elon Musk took over Twitter, remember he got rid of like half the people that worked there? And people were like, oh, like, is Twitter going to just stop working? Well, no, it still works like 4 years later. It still is, operational. It's really possible that Jack Dorsey just dramatically loves to overhire and bring on a ton of people. And this is them being like, hey, we got to just get this under control.
Now, the other piece that I'll mention, a lot was theorized at the time too, like, well, maybe the company's just in rough financial shape. It doesn't, again, we'll see quarter to quarter, but their most recent year was their best on record. They had operating income of $3.2 billion. Financially, they seem to have been improving over the last few years. So I also want to paint a picture of, well, this company was going down the tubes and they needed to fire anyway, and they just got to blame it on AI. I don't think I can make that compelling case.
No. So I think ultimately we're going to have to see what actually unfolds over the next few months. Not in terms of even think about Block. The day they announced this, the day after, I think they saw a 24% bump in their share price, somewhere in that ballpark. I use the phrase corporate lemmings a lot because CEOs are like lemmings. They see a share price go up because a company did something and they say, oh, we got to do that. Now, if Block in the next 2 months gives all those gains back and then some, you might see corporate CEOs being like, oh, maybe that's not the lever to pull. But I always get nervous when companies start laying off large numbers of people and the stock responds positively because
other companies.
I know other companies are just sitting there saying, yeah, let's do this. That's what CEOs do. I know every CEO wants to be like, no, I'm the visionary. I'm the Steve Jobs. You're not Steve Jobs. Steve Jobs was Steve Jobs. Most are corporate lemmings. And specifically, remember, CEOs are appointed by boards of directors. Most boards say, hey, something good's happening over there. Do this or we're going to find a new CEO.
Can you help me square the thinking of...
Would you like me to block it?
What we saw with Block, what we saw with the reaction to Citrina Research, all of the different reports over the last 4 weeks when it comes to software, logistics, financial services, and the market reaction we got from NVIDIA earnings release, or should we take a break and then talk about that next?
It's pretty meaty. I think we should take a break.
Quick break. Let's talk about NVIDIA's earnings next.
When business news breaks, we're talking about it on X. Watch the Financial Exchange every day live on X. This is the Financial Exchange Radio Network. If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Protecting your home with the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, so last week, one of the major things that we saw was NVIDIA reporting earnings. And so, obviously, when NVIDIA comes out, it's a huge deal for them to report. They beat on revenue by about $3 billion, about 5%. They beat on earnings by 11 cents a share, about 7%. Their guidance was really strong as well. This was on Wednesday. So the stock closed on Wednesday at about $195 a share and promptly fell to about 185 the next day, so down 5%, and then down another 3-4% on Friday to 177.
So my question about all of this is, how do I square good earnings, good forecast, positive news from NVIDIA with the paired concerns that everybody has about how it's going to be so successful that it's going to cause a bunch of people to be unemployed and industries to be disrupted? I continue to have a tough time with putting those two theories together.
Couple things. The first is NVIDIA still remains range bound. The stock has pretty much been between $170 and $200 a share since last August.
Mm-hmm.
So we're now 8 months and the stock hasn't moved. I mean, it's at 181 right now. It was at 183 on July 31st.
Yep.
Stock has not moved in 6 months.
Yep.
So I think ultimately it's something where what plagued NVIDIA in that earnings release was one of the things they said was, hey, we've received, indications that our 2027 revenue outlook is starting to firm up. But they couldn't give any specifics. And this is the whole question. It's not, did people buy your products this quarter? It's not, are people going to buy them next quarter? We know that they are. The problem for NVIDIA is no one is 100% sure that these big hyperscalers, the Microsofts, the OpenAIs, the Googles, the Amazons of the world, no one's sure that they're going to be able to maintain or accelerate their level of CapEx through next year right now. And NVIDIA couldn't answer that. And
they also won't be at the front of driving it. They will be the recipient of that drive, but not the cause of it.
And so the reason why the stock hasn't broken down further is because you can't with 100% certainty be like, yeah, that CapEx isn't going to show up.
Right.
Because it could, and if it did, then you'd look dumb. But on the other hand, there's no indication, yep, it's definitely going to be there. Remember, the increases that we've seen in CapEx for this year, there's a lot of theorizing out there that that's mostly because memory costs have gone exponential. And when you're building these chips and these servers for AI purposes, there's a ton of memory that goes into them. And so it could just be increased memory cost as a huge chunk of it and not more NVIDIA chips being bought, actually. So this is why, for the last 8 months now, NVIDIA has just been treading water. It goes up a couple percent. It comes down a couple percent. It goes up a few percent. It comes down a few percent. And the earnings report, in my opinion, was just kind of the latest iteration of that.
Many families consider using a life estate as part of their planning, but without a clear understanding, it can lead to unintended consequences. Cushing and Dolan have a new guide called Calculating the Consequences of Life Estates that explains what to watch for and how to think through your options before making any decisions. Key rules to be aware of include the 5-year Medicaid look-back, where the state reviews financial transactions over the prior 5 years, and certain transfers, like giving away property or assets, can create a period where benefits are delayed. Call Cushing & Dolan at 866-848-5699 to request your free guide today. That's 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I want to talk about buying cars, and specifically, piece in the Wall Street Journal, the obscure fee costing you more to buy a car. What they're talking about here are what are known as destination charges, which are supposed to be, hey, here's how much it costs to get the car shipped to you, but in reality, they're basically a flat fee no matter where you buy the car anywhere in the country, and you can't get the dealer to waive the destination charge if you go to pick it up because, oh, you're already at the dealer and they've already taken delivery of it. So the reason why these are so bothersome to me is they're kind of like resort fees at a hotel.
Sure.
Where you're like, oh, hey, it's $160 a night to stay here. Great. And then you go to the checkout screen, and it's like, no, here's the $35 resort fee. Well, what does that get you? It gets you a complimentary bottle of water every day and use of new towels. And you're like, well, guys, like, what are we really doing here? Like, what are we actually paying? And the problem is that dealers in the last couple of years have been increasing destination fees as a way to try to make it look like the price of the car isn't going up, but just tacking something on, the same way that hotels have done with resort fees.
Now, I will say, at least this is required to be on the window sticker. I did check. It is federally required to be on the window sticker, so when you're buying that new car, it's there. But obviously, when you are advertising during the Super Bowl, no, you do not need to have the delivery fee in the MSRP.
So, I got to be honest. This is one of those cases, like, unlike airlines where you're like, oh, yes, I'd like to see this, unbundled because maybe I'm just using carry-ons, which, by the way, we can talk about whether or not you should actually have to pay for carry-ons or checked bags, but that's a separate story.
Sure.
The answer is you should have to pay for your carry-on, but not for checked bags.
Okay.
We can get to that later. In any case, you can't unbundle this. You can't be like, no, I'm not going to take, like, the destination charge. What's the dealer going to do? Ship it back to the factory so you can pick it up there? No, like it's just not possible. Fee. Can we talk about the airline thing quickly?
Sure, Chuck. Why should it be free to...
Because every checked bag makes it longer to get on and off the airplane, and so it takes a whole bunch of time. If airlines really cared about
carry-on bag takes longer.
I'm sorry, carry-ons.
Yeah.
If airlines really cared about efficiency and actually wanted to maximize it, they would charge you for checked bags and let you put your bags in the baggage section for free.
What's the math behind that, though? Can't a flight sell that under the aircraft space for other goods, and so the more baggage they have, the less they can sell to other transportation?
Probably, but this is why they don't actually care about efficiency. Both. You know, if you really want to be efficient as possible, don't let people carry on bags.
Yeah, I'll tell you, we take a lot of time to get my 3 daughters their little rolly suitcases.
Oh, yeah.
It takes we disrupt.
You're jamming them through. I know it'll fit. It got into the thing outside the gate.
Yeah. Yeah.
So, yeah, but if you really cared about efficiency and getting people on and off the plane quickly, yeah, you charge the heck out of bags that you carry on.
Way to go, Spirit.
Quick break. When we come back, we've got more Financial Exchange.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Divorce isn't just a legal process. It's a financial reset. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide, Divorce and Your Financial Plan, walks you through how to take inventory of your assets, avoid common mistakes when splitting accounts, update beneficiaries, and start building a plan that works for your next chapter. Divorce is complicated enough without all of its financial ramifications. The decisions you make now can have lasting consequences for your future, because after a divorce, it's not just about who gets what. It's about making sure your financial life is truly separated and set up to support your goals going forward. Call the Armstrong Advisory Group right now at 800-393-4001 and get your free guide, Divorce and Your Financial Plan. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with the trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and as we kick off the week and the month of March, top story is obviously the conflict in the Middle East and the potential impact on markets. Obviously, you talk about the markets that people are, watching most closely: equities, bonds, currencies, and energy. And clearly, what we're seeing here, some big moves in oil today, and so that's kind of where we'll start off. Right now, we've got West Texas Intermediate up about 6.5%, Brent crude up 7.5%. So, again, it's not a one-to-one extrapolation, but as of yesterday, AAA national average for gas prices closed at $2.99 and 7/10. You're probably getting at least into the $3.10 to $3.20 range this week. And obviously, we've got the potential for things to move from there. The big things that are going to determine how this conflict impacts financial markets and the economy as a whole, the duration of it. If it's over tomorrow, then I don't think you have any major impact. The scope of it, does it stay limited in terms of the geography that it occupies, or does it spill over into more of the Middle East? Unfortunately, right now, you've at least got Iranian attacks that are targeting basically every one of the Gulf countries at this point. I've seen attacks in Oman, the UAE, Bahrain, Kuwait. I mean, like, pretty much you go down the list and you've got something that's happened there. So the scope of it is expanding somewhat. And the other piece is going to be the magnitude. Hey, are these kind of one-off little things, or do you see a deepening conflict in these regions that are being affected? That's something that we'll have to monitor as well. At this point, there are no ships that are transiting the Strait of Hormuz, not because Iran has actually blockaded or blocked it, but the mere threat of it is enough that insurers have pulled policies and basically won't insure ships carrying billions of dollars worth of oil through there. And so those ships, the companies that operate them, are saying, gee, it's probably bad business for us to operate uninsured in a place where we could potentially be sunk. And so you have ships piling up on both sides of the strait at the moment.
How about the context of just geopolitical events generally? Because the lessons from the last, frankly, quarter century for investors when it comes to concerns about geopolitical conflict has been faded to the background. It's not going to matter. Now, the Russian invasion of Ukraine did have some market impact. You can argue that it led to higher inflation and misinterpretation by Federal Reserve officials. So I don't think you can fade it entirely, but that seems to be the lesson that investors are taking today, at least equity market investors are taking today. Yeah, oil prices could be higher. They could be there for longer. Maybe that could lead to higher inflation, and perhaps this means the Fed can't cut rates in the same way. But what does it mean for equity prices? According to investors today, nearly nothing.
And I think in general, it's usually best to completely ignore equity prices the day that anything is happening. We saw this back in 2022, where on the day of Russia's invasion of Ukraine, equity prices rose 4% from the bottom to the top over the course of that day, going from a 2% decline to a 2% gain from the prior close. And ultimately, markets still trended down over the remainder of that year. You could say it was because of other things than the conflict, but again, how the market responded on the day of the conflict was not ultimately an accurate driver of what was going to happen over the next 12 months. You could even see a similar parallel here. Hey, maybe a Middle Eastern conflict is not a major driver of market action for the next 12 months, but you've got concerns about private credit. You've got concerns about AI CapEx that could be. And so, again, I think what equity markets do on any one particular day is not really a useful barometer of what they're going to do in the future. So, with that in mind, you do have equity markets that are actually mixed today at the moment. The NASDAQ composite is now squeaked into the green, up 15 points, a little less than 0.1%. S&P is only down 9 points. Dow is off 84 points. So not too much movement there on the surface. Where you do have a bunch of movement is in the bond market. And bonds are doing something that it's technically called puking. And you've got the 10-year Treasury up 8.8 basis points to 4.05%. This is happening at the same time that the dollar is getting bid up by now 1.1%. So the interesting thing that you're seeing is that, again, like you've got risk off being signaled. I'm sorry, not risk off being signaled. You've got it's not risk on. It's just inflation on, in my opinion, being signaled by the bond market at the same time that the dollar index is saying risk off. And then you've got all kinds of weird undercurrents that are happening as well. Again, I think everyone globally, remember, these are global markets that we talk about here in many cases. What's happening in precious metals today is nothing short of a spectacular reversal that you're seeing. Just looking at silver as an example, silver this morning at one point was up about 6%, trading at $96 an ounce. It's now down over 10% from there, down to 86 and change. Gold has had like a 4% intraday reversal as well. So everyone's kind of scrambling, trying to figure out what this means. And the ultimate answer is like no one really knows anything on day one right now. And people are just trying to sort through, like how do I protect myself from this and that? And there's no coherent message other than investors are trying to scramble to where they think is a safe place to be.
For the last week or so, you've seen 30-year mortgage rates dipping underneath that key 6% benchmark. When we get data for this week, which will be over the course of the next few days, you can assume that those rates will bump back up. They tend to trend towards the 10-year Treasury very closely, so we will see where that goes. It also just makes me think of the dominant narratives for 2026. And obviously, the dominant narrative has been going into this year all about artificial intelligence, but I think there has been an undercurrent of confidence that inflation will remain muted and rates will come down. Would you say that is the overall narrative, right? Like, not necessarily on everybody agreeing on the same timeline, but I do think that there has been a narrative baked into markets that, hey, inflation is going to stay under 3%. And rates will continue to come down. If not this spring, then maybe late summer or fall. This is an interesting potential diverting path from that overall narrative. So we'll have to see how it develops. I'm not saying that disinflation can't continue, but a key component of the disinflation we've seen for the last couple of years has been help from energy prices. If that reverses in a longer than 2-week trend, then you can call that narrative into question a bit.
Well, even before that, though, we got a PPI reading on Friday that was a little bit caliente. And I think that the other piece on it, look, PPI, Producer Price Index, no one really knows how to read it, to be honest. Like, I think most people read it wrong. But what's interesting from a market point of view is, hey, you can project the objects that pass through there into PCE, which the Fed watches. And most of the pass-through items came in hot to the point where most of the major investment banks now are saying that core PCE is going to be somewhere between 0.4 and 0.5 for the month now, which is hot. And this is before anything was happening in energy. You couple that with this morning, we haven't talked about it at all, ISM manufacturing. Did you see it?
Nope.
No.
A little bit distracted by Iran.
I know, a little bit distracted. I happened to see it. And one of the components in the ISM manufacturing survey is prices paid. Higher numbers generally, the way it works, higher numbers mean that more respondents are seeing that category increasing. Prices paid were expected to come in at a level of 59.5. The prior reading was 59. They came in at 70.5. Now, that was before anything energy-related, so it's telling you that manufacturers are seeing more broad-based upward pricing pressure right now than they previously were. So I am a big believer in, look, for the last 40 years, you had to wait for inflation to print before you got worried about it.
Sure.
I still do believe that because I can't tell you how many people got head-faked in the 2010s about, inflation's coming because of this and that, and it never came in the 2010s. I do think you have to watch with kind of a quicker response now than previously. And even though for the last 6-7 months I've been saying that the unemployment side of things is the bigger concern, if you get a couple months of hot inflation here with this backdrop, then you better watch out on what's going on with bonds and that side of the ledger, because you could have some real problems there depending on how things develop. Let's take a quick break. When we come back, we've got trivia, and then we're going to hear, we're not going to hear from him, but Lloyd Blankfein wrote a book, and the Financial Times tried to make a piece out of it while also talking about why he thinks there's an elevated risk of a financial crisis. So we'll cover that jumble of ideas after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Divorce isn't just a legal process. It's a financial reset. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide, Divorce and Your Financial Plan, walks you through how to take inventory of your assets, avoid common mistakes when splitting accounts, update beneficiaries, and start building a plan that works for your next chapter. Divorce is complicated enough without all of its financial ramifications. The decisions you make now can have lasting consequences for your future, because after a divorce, it's not just about who gets what. It's about making sure your financial life is truly separated and set up to support your goals going forward. Call the Armstrong Advisory Group right now at 800-393-4001 and get your free guide, Divorce and Your Financial Plan. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time for trivia here on the Financial Exchange, and this week the third largest retailer in the world, Costco, reports earnings. Costco originally began with a wholesale business model aimed at enrolling businesses as members, then began to also enroll individual consumers and sell products intended for them, including its own private label brand. So our trivia question today: what is Costco's private label brand? Once again, what is Costco's private label brand? Be the 8th person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and win a Financial Exchange Show t-shirt. Once again, the 8th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
So Lloyd Blankfein is the former CEO of Goldman Sachs. In fact, he ran Goldman Sachs leading into, during, and after the financial crisis. And
the great one?
Yes, not the lesser one, the great one.
Yep.
And so Lloyd is pretty well versed to be able to speak on financial crises, since his bank was, the cause of one of them. It's, again, like,
not the only cause, but he was a cause.
Like,
yes.
his bank absolutely contributed to it. And so he's got a book coming out, which led the Financial Times to interview him about the book. And in passing, he also then said, quote, I would be very aggressively marking the market, making sure people sell certain things even if they're liquid, just trying to make sure that you could. He says the lack of a major shakeout since 2008 means people aren't as scared and have gotten more complacent. I'm not saying it's going to happen tomorrow or what direction it comes from, but when something goes off, you're going to find all the assets that have been carried at prices that can't be realized in the market. And again, in case you can't tell, like, I'm not like a huge Goldman Sachs or Lloyd Blankfein fan. It's just like, I'm not. But here's the thing. Is it Warren Buffett or Charlie Munger as the saying, when the tide goes out, you see you swimming naked?
Yes.
It's basically what Blankfein's saying here.
Yeah.
And what you're starting to see, quite honestly, bunch of naked people. Okay? Last week alone, there were no fewer than 3 different private credit funds that either had to sell assets way cheaper than they had listed them, or that had to take big write-downs and start putting new gates up.
Yep.
And I gotta tell you, it's starting to look kind of grim on the private credit side of things, because it's just like, again, Jamie Dimon said, hey, like, there's rarely only one cockroach. I'm just throwing a lot of metaphors out there. We're seeing a few cockroaches now. Like, they're popping up left and right. And the problem for the average person listening is not that you likely own a private credit fund, because most likely if you're listening, you're like, Chuck, I don't even know what private credit is. And that's fine.
But somebody you know does.
And someone you know does. And the other piece is there's a pretty good chance that whoever underwrites your life insurance owns a whole bunch of private credit in their investment portfolio.
So back to the Blankfein piece for just a moment here, and I don't want to spend much more time on it. Can Lloyd Blankfein give an interview without talking about the potential for financial crisis and what he would do in the event? Because, I mean, you ran Goldman Sachs during the great financial crisis. I don't know that you can give an interview without talking about a financial crisis. In fact, it might be irresponsible of you not to. So I don't know that I should take anything whatsoever about Lloyd Blankfein talking about, how long it's been, that there's complacency. I think he would have given a similar interview in 2015, 2020, and 2025.
I don't think he would have.
No?
No. And look, maybe I'm just... Remember, financial crisis is a very specific type of economic event. Not every recession is a financial crisis. A financial crisis is, hey, the financial system has problems with it that prevent it from working properly.
Yep.
And I think you have some signs of, hey, there could be some problems there right now in that private credit space. Like, it's it's pretty gnarly what's happening there when you look at the big publicly traded asset managers. I mean, I'm just looking year to date, but Blackstone's down 26% year to date. Not BlackRock, who, runs a bunch of ETFs and, mutual funds, but Blackstone down 25% year to date. KKR down 30% year to date. Apollo Global down 26% year to date. Ares Management down 30%. Like, these are companies that are getting bludgeoned because no one believes that the value of what they own is worth what they've said it is. And
it keeps running the gamut. Last year it was because of fraud. This year it's because of software. And
here's what it is, quite honestly. Like, there's probably a bunch of this stuff. Not probably. There was a bunch of this stuff that was written back in 2021, 2022 in a very different interest rate environment. And now as they're trying to companies that they might either own in their private equity portfolios or that they've lent to are trying to, refinance the loans that they have. They're saying, no, this math doesn't work, and no one wants to own the stuff.
Yeah.
And so, like, it feels like there's something kind of gross in there. We still don't know how big it is. We still don't know how widespread the problem is.
We should make it easier for banks to buy it.
Oh.
That seems to be one of the solutions right now coming from some areas of the Federal Reserve is, hey, let's drop some of the regulations that make it so that private credit has to do all this instead of banks. Let's let banks do more of it. And that seemed like the wrong reaction at the wrong time.
Why don't we stuff the private credit in your 401k?
Yep, that's the other solution. Not from the from some regulators.
Yeah, let's find other bag holders, kind of like what it feels like. And I said that when we started talking about trying to stuff private credit into 401k. Ares Capital Management does not want to deal with your 401k. So why are they wanting to deal with your 401k? Let's take a quick break. When we come back, we get the trivia answer in Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, this is Mike Armstrong and Paul Lane from the Armstrong Advisory Group, and we're here to talk to you about our brand new guide, Divorce and Your Financial Plan. Paul, let's fast forward here a moment. You're through the divorce process, and now you are focused on this entirely new financial life. What do you view as the first step toward developing that new financial plan as you're thinking about a single individual versus a married couple?
What you really have to focus on, Mike, is the cash flows of your household. You've gone from presumably 2 incomes down to 1 income, or you're just living off of a lesser income. So understanding what your expenses are going to be going forward and matching that to the income that's coming in to your newly formed household is really important. That is something that is a area of significant focus, as well as health insurance coverage is another area that is of significant importance.
How are things like taxes and general expenses, how does that all change now if you're thinking about a single person versus a married couple?
Yeah, the tax brackets will change for a single filer versus a married couple. Usually to the downside, really, you're going to pay more in the way of taxes. So that's something that's really important to focus on, as well as many other areas of your financial plan.
Folks, we've got a brand new guide, again, from the Armstrong Advisory Group. It's free, and it's available at armstrongadvisory.com. You can request it there. It's Divorce and Your Financial Plan. There is a lot that goes into rebuilding your financial life after a life event as consequential as a legal divorce. If you have questions about how to navigate that process, this new free guide from the Armstrong Advisory Group is a great starting point. You can get it by requesting it again at armstrongadvisory.com or calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Equity markets are seeing a modest sell-off as Wall Street assesses the conflict in the Middle East after the U.S. and Israel attacked Iran over the weekend, sending oil prices and bond yields higher. Right now, the Dow is down nearly 0.6% or 277 points. S&P 500 down about 0.5%. NASDAQ down about 0.33%. Russell 2000 is up about 0.25%. 10-year Treasury yield jumping 8 basis points now at 4.048%. And crude oil up nearly 6.5% higher, trading at $71.25 a barrel. Several major oil producers, including ExxonMobil and Chevron, are seeing slight gains in reaction to that increase in oil prices. Defense stocks, including Lockheed Martin and Northrop Grumman, are also seeing gains of about 2 to 4%. Travel sector taking a hit due to higher oil prices and disrupted global travel. Delta, American Airlines, United, all shedding anywhere between 3 and 5%, while Expedia and Booking Holdings are down about 1 to 2%. Cruise operators, including Norwegian and Carnival, are also taking a hit of about 7 to 10%. Outside of the Middle East, NVIDIA announced this morning it is investing a combined $4 billion in Lumentum and Coherent, two companies developing photonics technology. Separately, the Wall Street Journal also reported that NVIDIA plans to unveil a new processor specially tailored to help OpenAI and other customers build faster, more efficient tools. NVIDIA stock is up by about 2%. And shares in Berkshire Hathaway down about 4% after the conglomerate reported a 2.5% drop in quarterly profit and a 30% decline in operating earnings. I'm Tucker Silva, and that is Wall Street Watch. In the prior segment, we asked you the trivia question: what is Costco's private label brand? That would, of course, be Kirkland. George from Danvers, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to George. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece of the New York Times: 4 ways to enjoy your savings in retirement without going broke. Books, Walks.
Camping.
Tanning.
And never-ending pasta bowl at Olive Garden.
Yeah, that's the way to do it.
What do they actually have in here?
Well, they talk about a few things, and then I'll incorporate a recent conversation I had because I think it's relevant. But aligning your spending with your life phase. So they accurately point out that the first decade, sometimes the first decade and a half of your retirement, oftentimes is the most expensive. Why? You're healthy. You want to do all these things that you've been holding off on, so it often involves a lot of travel, and that stuff gets expensive. And so if you are in a sort of set it and forget it mode where you're just saying, okay, what was the old asset allocation advice, right? You take 100, subtract your age, and that's how much you should have in stocks. If you are using that, that may or may not get you to the right place in this environment. In fact, there's an argument where depending on how you're set up, maybe you should actually get a little bit more aggressive once you're past, in terms of your investments, once you're past that big spending stage of early retirement. Giving yourself a paycheck. So here's what is actually meant by this. And it goes to a conversation I had recently. A good financial advisor will spend time with you explaining where it makes sense to take money out of your buckets, right? You might have some cash. You might have a retirement account, a jointly held account with your husband or wife. And a good financial advisor will tell you, okay, well, based on what you need and your taxes right now, this is where you should pull it. And yeah, maybe you should delay Social Security and do this instead.
Sure.
A great financial advisor, though, will spend a lot of time on the psychology of that because there is, for a lot of folks, and I had this conversation with somebody just last week, this psychological boundary of, oh man, am I really going to spend my life savings that I have in an FDIC insured bank account to satisfy my everyday living expenses? And then will I actually spend on the things that I want to, or will I just have a miserable lifestyle because I'm terrified of spending that money? And so giving yourself a retirement paycheck of literally even if it's just moving money from one account to another and then putting that money back into your bank account on a weekly or monthly basis, just like a paycheck, can have a real beneficial impact on your willingness and ability to spend. And I see this especially with, frankly, a bunch of Yankees in the Northeast who learned from their Great Depression era parents that they just, don't spend money. And so there can be some strategies here that still take advantage of, important tax considerations while playing to the psychological aspect of retirement, because a lot of it does end up being psychological. You have to be comfortable with what your plan looks like and how it's going to develop to actually enjoy yourself in retirement. I know this stuff's complicated. I know we spend a lot of time talking about the tax benefits of strategies like delaying Social Security and doing Roth conversions. From firsthand experience here, what is at least equally important is having a good and thorough explanation and a comfort level with what your spending is allowed to be and how you're going to do it. It's just so critically important. And if you're not getting that today, if you feel as though you don't have a coherent plan for what am I supposed to be spending, what am I allowed to be spending, and do I feel comfortable spending that money in retirement, I urge you to build out that plan and get some trusted advice so that you can feel comfortable with your strategy. The phone number, if you want to chat with somebody at the Armstrong Advisory Group who focuses on this type of planning every day, is 800-393-4001. You can check us out at armstrongadvisory.com. Book a time for us to call you back if you're busy right now. But that number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. Want to cover this piece on streaming?
Sure.
Yeah, we could do that. I don't know. So it's titled, streaming is going to cost more. That's the price of mergers. Or, hey, streamers dramatically underpriced their product for years trying to get you to sign up for them, and now they're raising them to try to make them profitable. And the ones that are going through mergers are going to have to raise their prices more because they've taken on a bunch of debt in order to do so, and so they got to figure out how to cover the cost of that debt.
Yeah, Netflix didn't merge with anybody. They've been driving their price up through the roof for the last 5 years.
Yeah.
It's nothing new.
I did see, I need to find the exact quote from Ted Sarandis, the Netflix co-CEO. He had one on on losing out on the Warner Brothers Discovery deal, where I'm going to paraphrase it just because I'm sure I bookmarked it somewhere, but I can't find the bookmark. But they asked him, like, oh, like, what do you think about this? Is this going to make it, like, harder for you to get, the content that you want? And he said, Paramount had to lever up, like, 6 or 7 times in order to pay for Warner Brothers Discovery. We're pretty sure they're going to need revenue in order to offset that, and we're happy to buy their content from them when they're ready to talk.
Yeah, frankly, a lot of this deal was starting to look and feel a lot like...
I said that the loser of it might end up coming out ahead when it's all said and done.
Yeah, it felt like that at the end, and in particular, the more and more I looked at it, the more and more Netflix just seemed like they were bidding on a studio lot in Hollywood, which I'm not going to say is unimportant, but I'm just not sure how relevant that is in 2026.
Yeah, it's fair. I mean, look, both these companies clearly thought it was important enough to bid a lot of money on it.
Yep.
All I know is that large media mergers generally haven't gone well in the last 25 to 30 years. There have been a few that have been successful here and there, but the other piece, like if we just want to talk about it, anyone who's tried to buy anything with the name Warner attached to it since 2000, it's gone badly. Starting with AOL Time Warner, continuing through AT&T and I think it was Warner Brothers at the time. Like, it's generally gone badly if you've tried to do anything with a Warner.
Yeah, the biggest successes have probably been on the Disney side, right? Their acquisitions of...
they bought Star Wars for $4 billion and Marvel for like
Star Wars, Marvel, and then what was the other studio that they bought? This was multiple decades ago now, but the one with the little hopping lamp.
Pixar?
Pixar, thank you.
Yeah.
Though, I mean...
But
pretty darn good.
Right. When you somehow convince George Lucas to give you all of the IP for $4 billion and then you can recoup that in like 2 movies, oh yeah, that probably was a good deal for you.
Yep.
This, you're paying, $100 billion for...
A lot of IP. There's a lot of IP.
But it's $100 billion.
Yeah.
It's a lot of money.
Yep.
Let's take a quick break. When we come back, we'll do a lot of stack roulette.
Follow the Financial Exchange on Instagram for market insight, clips, reels, and daily money talk. This is the Financial Exchange Radio Network. Protecting your home with the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book your participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. AmstrongAdvisoryGroup.com.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Mike, what do you got for Stack Roulette for me?
AI and fast food, Burger King. So we're gonna start off with how some of these fast food companies thought they were going to be able to use AI, which was to have it actually take the orders, which I think is still being tested out in some cases. But it was really leading to some bad results, including creative people screwing with the AI, such as ordering 1 million cups of water. Which is a funny prank, but the AI didn't know what to do, and it would fail in a number of cases. So instead, we are moving towards monitoring. Now, we reported this in the case of some call centers previously, and now it's being moved to fast food as well. But a lot of call centers are now utilizing AI to monitor every single call that goes into that call center. Not replace the human, but provide instantaneous feedback on every single call. And having listened to some interviews with people who work in those environments, it was the case where, you would get these performance reviews maybe twice a year. A manager would listen in to maybe 5% of your calls and give you some feedback on them. Today, you are getting monitored by an AI for every single second that you are on the phone and constantly provided feedback for how you could have pronounced something differently, said please, thank you, the tone of the conversation, and ultimately a fire or promotion decision being made based on that AI feedback that you get. Burger King now doing the same thing with their own order takers, effectively an AI chatbot and monitoring system that will sit on the line listening to those calls and determining, hey, did you say please? Did you say thank you? What was the tone of the conversation you had with the customer as they were going through the drive-thru? And if this sounds dystopian and sucky, it is, and I don't think it's going to change. I think ultimately AI systems will probably replace a lot of these human beings, both in call centers across the globe and in terms of order takers. But in the interim, it's just making those jobs probably crappier from the everyday perspective. Oh, I do too.
Hate it.
But I think it is a logical step for where AI is going to go. And so if you are in this space, it is going to make your job so much worse.
So it's been about 20 years since millennials started making their introduction to the workforce.
Yep.
Which means it's now time to crap on an entirely new generation of young people that are making their way into the workforce.
Let's do it.
Piece in the Wall Street Journal. A new lost generation. Why Gen Z is unprepared for the workplace. And look, here's the deal. As a proud
Does it involve
millennial-
avocados?
No. But as a proud millennial, I feel that I have to, take up the mantle of the kids are all right. Okay, because this piece gets written about every generation that has ever come into the workforce for different reasons.
Yep.
With millennials, it was, oh, they're lazy. Oh, they job hop every year. They can't stick around. Like, you heard all these things.
Yep.
With the hippies, again, like
Millennials were the trophy generation.
Yeah, like
they need to be rewarded for everything
you,
they do.
You need to be rewarded. Yeah, like the parents of millennials weren't the ones who gave us those trophies, by the way.
No, I demanded them.
Okay.
I know I came in 6th place.
Our parents, by the way, the baby boomers, they were the hippies. Bless you, Tucker. The hippies, when they came in the workforce, oh, their hair's too long. They stink. Like, all the things about the hippies and all that. So, yes, I get it. 22-year-olds aren't always like 100% prepared for the workforce, but you weren't prepared at 22 either. And I know a lot of people listening will be like, no, I was mature. It's fine. You weren't perfect as a 22-year-old. Like everyone can look back at stuff they did when they were 22 in the workplace and be like, yeah, probably could have handled that differently. I know a number of things that I look back at and I'm like, ooh, I kind of sucked back then. Like, I was pretty bad at this, and I wish I had gotten better, but I did.
Don't look back at yourself 15 to 20 years later and cringe a little bit at some of the things you said and did, then there's something wrong with you.
Right.
That said, there is, like, interesting stuff that I think is different about every generation. I think some of the things you brought up about millennials is accurate, right? Like, they did job hop more than other generations. I think it was mainly because of the state of the labor market and the fact that pensions no longer existed. But sure, like it was a number of different things that were different. They were also shaped by watching their parents go through the great financial crisis and seeing them lose their jobs and developing a mistrust of the companies that hired them in the first place. So when I look at Gen Z, there's some other interesting stuff. They are shaped by COVID, going through education and being stuck at home for 2 years. They are very much shaped by a digital upbringing. They were given phones at a very young age. They don't do quite as well as interacting with each other face to face. The other piece that I have heard from parents of kids in this generation, and I'm now seeing confirmed, is some statistics on relationships, romantic relationships specifically, and some data that's been cited that young people, a little more than half, 56% of them, make it to adulthood having had a romantic relationship compared to about 3/4 for previous generations. And I find that piece to be fascinating because I have heard that from other parents of teenagers that like they just aren't dating, they aren't going and doing things face to face, and they don't seem to be showing an interest in that, which is fascinating because obviously, anyone listening today who was in that 3/4, I think it's safe to say that your teenage years were somewhat defined by relationships like that.
Sure.
Changed who you were, changed how you behaved, changed how you interacted with other people. And so I find all of that stuff very interesting. But to your point, that does not make Gen Z unemployable. It just makes them different than you.
No, it doesn't make them unprepared for the workplace any more than any other generation was when they first showed up at work.
Sure.
Like everyone has to learn how to actually work, just like, we all have to learn how to walk. We all have to learn how to talk. Like you
and enjoyed teasing that Gen Z kid who is going to run laps around you when it comes to using artificial intelligence in the workforce.
Yes.
Because you know that they are. Just like the millennial ran laps around you when it came to resizing PDFs. It's just the reality.
How do you do that?
I still can't figure it out.
Right? Like, how do you do that, actually?
How do I export this? It's just there.
So, yeah, every generation is a little bit different, and they will be relentlessly teased by the two generations.
I'm just picturing the aunts from that, like, State Farm commercial. Export! Export! Export!
I can't edit this PDF.
Oh,
it's just
man.
frozen.
Anyways, as we wrap things up here, the S&P has now turned 1 point positive. So we got 2 out of 3 green for the day here. And we will continue to keep you updated and see where markets go as we move through the week. We're done for the day. We will see you tomorrow on the Financial Exchange.